So, hello again, everyone. Thank you for joining us again today for what is our 7th outing as Future of Money. Great to see you all here, and welcome to everyone that's joining us on YouTube as well. As always, Alex is joining me as a host today. Hi, Alex.
Hi there. Hi, everyone.
So, as you're aware, our topic today is currency fluctuations, what they mean for exports, the economy, and you. And we're joined by Kevin Tullett, Managing Director of RedFX. Hi, Kevin. How are you?
Good afternoon. Hi, everybody.
So, Kevin, perhaps you could tell us a bit about yourself and what you do.
Sure. So my prior life was in investment banking, in treasury rooms, dealing rooms for 3 or 4 investment banks and a couple of global brokerages, sort of on the interbank side, so trading and treasury products, etc., and FX. And a long time ago now, 7 years, set up an independent currency brokerage for retail customers, so private individuals looking to make big international asset purchases, and also for corporates. So any corporate that has currency exposure, we work alongside them to manage and mitigate any risks that they may come across. But all of my history has been basically FX related. The world has been related to currencies and foreign exchange.
Great. So it's great to have you here so that we can actually hopefully understand a little bit more about the industry. Something that me and Alex have been discussing and that we'll be talking about in our upcoming podcast is that it's perhaps an area that people are a bit daunted by, that, you know, it's FX or Forex or foreign exchange trading, and people don't always know what it is. So hopefully we can give a bit more of an insight today. And yeah, so we'll get going on the questions. As Ian has already mentioned, if anyone has any questions that they'd like to ask, please feel free to post them in the chat, and we will come to those in a bit. But yeah, let's get going. So one question that seems to come up in kind of all of our events is about the US dollar and its role in the world. So the question that we put to everyone is, why is the US dollar the world's dominant currency? And particularly, why isn't it the euro? Why isn't it the Chinese renminbi? What's special about the dollar to make that the world reserve currency?
Yeah, I think it's a good question and valid and of its time. I think given the rate of innovation across financial products, we see the world crying out for change in everything. So whatever the establishment was, the rapidity of change, people are crying out for it to change, whether for good or bad. I would break that into two distinct questions. Why would it need to change? Yes, change is good, but why would it need to change? And the second thing would be, what does a global reserve currency, what does that actually mean in terms of a currency? So if we look at the first part, why does it need to change? If we boil FX down, so currency down, daily transactional volume is at $6.5 trillion. Now, that doesn't mean to say that every buyer is different and every seller is different. There are people that buy it and then sell it, etc. But that's a big market, right? It's a big number. Everybody understands that. That can be international trade, import-export businesses. It can be as real as mergers and acquisitions activity, cash payments for goods. And then if you look at sort of on a banking level, as I said earlier, most interbank transactions will boil down to have some sort of FX exposure. So you see a huge volume in bank-to-bank transactions that are hedging part of a derivatives risk. And then that boils down to remittances, which is smaller sums of money being sent around the globe, which was covered by Ollie Walsh, I believe, in one of the other Future of Money. So that it's a huge market that is available to people doing remittances and global mergers and acquisitions activity. So it's a big market, therefore it needs something within it that's big and stable. And in 2019, the dollar was on 88% of every FX trade. So wow. One side of every FX deal was the dollar. Of 88% of FX deals was the dollar. That's an enormous proportion. So not necessarily on all of them, but 88%, the dollar's one side of that. So there's the question, I'll go to the Chinese renminbi. We've got, so whatever's going to challenge it has to be big and strong and needs to grow. And the numbers are quite staggering, given the fact that Chinese renminbi is on everybody's lips, it still only represents its growth over the last 5 years has only been at the same level as the aggregate market. So it hasn't outpaced the growth of the market itself. And it's the 8th most actively traded currency on earth. So it's not top 5, it's top 10 barely. And in terms of a global share of a 6.5 trillion daily market, it represents 4.3%. So it's not particularly close. Yes, probably something will change, and I'm sure every 20 something will tell us that it needs to change, but that's, you need to pick a winner. If you look over the last 3 years, this is for various different reasons, the currencies that are actually taking market share quicker than the renminbi are South Korean won, the Indian rupee, Indonesian rupee. So you need to pick a winner. Of those, that's also pretty difficult, right? So if you were going to choose a global reserve currency, you probably wouldn't just do it on the size of an economy. You'd do it on the ability of its financial system to cope. I think the Indian rupee as a global reserve currency is a bit of an outlier, and yet it's growing quicker in terms of global trade and global transactions than the renminbi. So it's a really difficult question. Let me look at a slide now. So I'll share this screen with you again. It's not. I don't necessarily think the. So if we look, the details don't particularly matter, but if you look at how enormous this is, it really is. It's a big factor, and might be a cause that it needs to change. So if we look at the second statement there, so dollar appreciates, global trade against other currencies goes down, let's call it 1%. These are big numbers. So yes, I totally agree that as a reserve currency, the dollar probably should change, because I think that dominance is enormous. But, and I'll take that off the screen now, but we're looking for an alternative. That's difficult. I don't think the euro is in play at all, because that's too disparate. It includes too many different factors without a stable bond market. So that would be point one. In terms of competition, it's difficult. The point two is a global reserve currency, is it truly about the dollar? I would say it's probably not about the currency. I would say it's about the bond market.
Right.
So the bond market, yeah. So overnight treasuries, 2-day treasuries, 1-week treasuries, 2-week treasuries, 1-month treasuries, that is as a source of funding is much more important than the fact that the dollar is the dominant trade factor. And that's why there's no bond market on earth that's going to come close to the US bond market in terms of access, liquidity, and pure volume. Although I would say so, when I was at university, I was taught that was the risk-free model. So you would price everything off of a risk-free bond, and that was US Treasuries. Mm-hmm. I think that's no longer true. I don't think the risk-free asset scenario exists anymore, but it's as close as. Again, if you look at what we need to do is find a really viable alternative. Currently, even though I don't call the US bond market risk-free anymore, the liquidity there it's enormous. It's gigantic, and it needs a true competitor. I don't know what that competitor is, but right now I can't. There's nobody catching. There's no proper economy catching up quickly enough to justify a change, despite the ever-changing world we live in.
Mm-hmm. All right. So Kevin, for me, can you hear me?
Yeah, I can.
Yeah, sorry. So for me, I'm always amazed to see how many things we see on the news. We have so many information there. Mm-hmm. So we have, obviously, for those who have access to the Bloomberg terminals, for example, we have news there. We have the 20 hours news channels, among other things. What is the impact? What impact does the market sentiment have on prices? Yeah. And how does it change over time if it does?
Again, a really good question, and of its time. So forget about currencies for the time being. If you look at what happened last week with GameStop, price of silver, the rumors around the Reddit the Reddit information flow. This is a great question. So if you take sentiment, for example, two elements are sentiment, markets, mechanisms, and I would say liquidity as well. Sentiment is enormously tricky to get a hold of, and most of us will get it too late. So Warren Buffett's thing, as I was told by somebody who's listening right now, how did you become so successful? I never bought at the bottom, I never sold at the top. So he's not looking for the tops and bottoms. Mm-hmm. He's a momentum trader, so he's sitting there looking at sentiment, and he's obviously done a pretty good job of it. So in that respect, what I'd say is FX doesn't react like most headlines suggest. It doesn't just wing about because something's happened. And what I would say here is there are obviously exceptions to that rule, without doubt. So if we look at this here, we have the example of this might not be as clear. So here, if we look at Brexit here, that is an enormously unexpected event. That's a 10% drop in what was clearly 2 hours. So FX normally behaves in a rational way. Sentiment, your drip-fed information, that new information, even though it's forward-looking and maybe medium, long-term data will come into play, that will feed in and sentiment will gradually make a currency strengthen or weaken. But this is a great example. So Brexit, boom, down it went. I think a less nuanced example of that, where that didn't work and sentiment had nothing to do with it, is this. So that's when the Swiss dropped its peg to the euro. Now that's one day, that's a 30% move in a currency. So their sentiment can't come into play. That is just way beyond what FX normally does. So in terms of information flow, it's supposed to be perfect information where FX grabs forward-looking economic data, and that gradually seeps into the market. And then sort of the market players come into play, which is what I'll come on to in terms of how that's evolved as well. The market can often overshoot. So if economic data, employment data, current account deficit, surplus starts to look really good, then you'll have a lot of people wanting to buy. Let's take the example of buying a currency. And short-term sentiment will probably overshoot the value of that. So it will be overbought. But over time, any two-factor rate should come into play. There's the equilibrium of the number of buyers equals the number of sellers. It's just like any commodity. But sentiment can play quite a big role in that. And it certainly does. But sentiment gradually should creep into the market and should stabilize somewhere. Now, what we've seen recently in terms of players or people involved, in every market, as we found out a couple of weeks ago with GameStop, that's evolved enormously. I think over the last 5 or 10 years, we've got more retail players in the market, and it's become more widely available, full stop. So let's forget about what we can call the mom and pop traders, the middle tier. So if lots of my clients have instant access to trade and buy and sell currencies in a relatively big way. But what we've seen is more retail players. And again, this is, I think, seen quite easily here. So here we have online traders, which we will call retail traders. This data is from 2019. So there are currently about 14 million people who basically trade FX. It's not an investment. It's a daily in and out, back and forth trading, and it's been more widely disseminated across Asia, as you can see, than Europe and North America. But there, I think the important factor is since 2014. So the current total is around 14 million retail traders. Since 2014, that's a 10 million person increase.
Wow.
Yeah, it's an enormous impact. So it only comprises 6% of the FX market. But if that rate of growth continues, which, let's face it, the whole world went online this time last year, right? And the whole world, give or take, it basically may have a little bit of extra cash in their pocket, as we see from GameStop. If that rate of increase continues, that will continue to have an impact. And the impact is, and I've seen it as well, and I'm sure enough people in the FX market have seen it as well, the politicization of news headlines and the way we consume news has made minute by minute, hour by hour trading, little frenzies every now and again, crazy little moves in an afternoon, be it stocks, be it whatever. It's the way information is disseminated, and it's the way people react now. It's vastly different from 10, 20 years ago, when you had 10 banks, they would quote a price, and they would be the only people being able to do it. It's vastly different now. The retail element is one part of it, but it's one element. And I'll take it one step further to an issue of sort of the reality of it. So yes, 6% of the market are just trying to come in and out and buy and sell stuff and make a profit. The reality is that it's not going to outsize the real market at all. So a good example, I mentioned mergers and acquisitions earlier, and I did some basic research. I literally Googled big cross-border M&A acquisitions. So in 2013, right, the FX market was less liquid. Verizon and Vodafone merger, it's cash. Okay, it's cash and shares, but some cash. $130 billion. So let's halve that. So $65 billion worth of sterling needed to be bought in a proper way, in actual physical cash needed to get from one balance sheet to another. Wow. So Tom and Barbara in their apartment in Chicago, trying to bet and head and do little bits and pieces for a couple of £100. Yeah, that's not working. That ain't happening. So it is a real market. It's a proper market that will dominate when it needs to. There's no doubt about it. So yes, it will change, and as those proportions differ, it will happen. But this is real stuff, and it does affect economies, and in a very real way. And the quick story regarding liquidity, which is important in that respect, what you can see is somebody come to a market and just flood it or take it away. And I worked with a guy who's actually just got out of prison, who's part of the LIBOR scandal, and that exactly the same thing happened in FX. And what you saw was at one moment in time, okay, the collaboration's obviously illegal. That's fine. I don't think that's ever in doubt. But at one moment in time, one bank had to buy everything. So like any commodity, FX is just a commodity, and had the firepower to do it. So if you wanted to move the price of anything, you just take every seller out of the game, and that can happen. It does happen in FX. It happens in every market. It's a commoditized market, and that's exactly what happened to these guys. They just said, right, I have the ability to buy everything, and I will just move the market. So sentiment and liquidity are directly linked, because sentiment can mean everything, but there's no liquidity, there's nothing you can do.
Yeah, fair enough. I mean, even from the charts that you showed there, which were looking at specific events, you could tell that there's definitely volatility and fluctuations happening all the time, and be that driven by multiple different things. But like you said, it does, the market is so important, and all these things are feeding through into real life. So with so many fluctuations and so much volatility, how can importers and exporters mitigate against this kind of volatility and fluctuations, and how can they look to protect their businesses?
Yeah, again, a good question. And what's the best way to put it is, any business that has a currency component within it, whether it's payable or receivable in one currency, and two currencies, and three currencies, we tend to make our clients answer really, really simple questions. So, and we force them to answer it. Should you factor a currency movement into your business? So if a client turns around and says, no, I don't want to do that, that's fine. It has to be an active decision to do nothing. You can be a passive receiver of the impact of a currency move, that's fine. But we make people say it. You need to actively do nothing, because it is a cost of an input, or indeed cost of an output. If you want to disregard it, that's absolutely no problem at all. Then, to be honest with you, for my business, we probably don't need to have any further discussions. But obviously, if I'm in the room talking to somebody, the chances are they're going to say yes. So what I guess, so a good example, and I'll show you something that was on, where are we? So this, if I can find it, was on, to show the importance of it. That is a headline from the BBC in January of this year. So the fact that that is there, that business there has effectively seen an external factor change her costs absolutely enormously, and that is absolutely no different from any other input cost. And I had a discussion around about the same time that headline came out. A client of mine, so doesn't matter who it is, obviously, he basically imports goods from China, puts a shiny label on them and resells them with a massive margin. And he's very, very, very good at it. He uses social media in a very clever way to do that. But we were on the phone discussing his annual budget. So he specifically said, and I've got them written down here, shipping costs for a 40-foot container went from $2,000 to $14,000, the same as that young lady there.
What?
His time, it's an enormous difference. His time lag from ordering from the factory in China to that actually being produced has gone from 10 days to 20 days. Time lag from delivery from the Chinese port to the UK dock has increased 2 weeks. So from 4 weeks to 6 weeks, again, 50% change. And now sporadically, if there is a shipping delay, the container ship passes that cost on to him. So sporadically, he could get hit with a $15,000 one-off hit. Now, those are all enormous factors, of their time, different factors influencing that. But just as important as all of those, this particular guy knows that a 5% move in the dollar affects his outright profit margin by about 3 to 4%. So again, if you put all of those together, and I've named them because it's a very big change in e-commerce and import exports at the moment. If you factor that in as a cost, it's just another cost. So in order to mitigate his external changes there's nothing he could do. So he can't change his supply chain quickly. He can't do anything about a sporadic $15,000 charge for delay. But what he can do is say, okay, my risk is also currency related. So what we do with him is we look at a quarterly budget and we say, okay, every quarter you're going to spend X amount of dollars as a baseline scenario. Might go up, it might go down, but your baseline is a number. What we'll do is we'll take 75% of that and we will hedge it. So what is hedging? We all know that hedging is pre-buying or pre-selling or something like that. But we'll do it quarter by quarter and say, okay, your minimum rate for the entire quarter, your minimum sterling cost per dollar will be this, and your maximum sterling cost per dollar will be this. Which means on day one, January the 1st, we don't necessarily have to do anything because he pays everything at the end of the quarter. If the rate goes up, we're going to try and protect him so it doesn't move, so it doesn't get any worse. If it goes down and his dollars become cheaper, we'll go to the market and basically gradually buy as the rate moves in his favor. So if he was trying to protect a 3% margin, maybe if it's favorable times for the rate, we'll try and lock in something somewhere between 5 and 7%. So for his quarter, his costs have gone in his favor. It's a nice saving for him. But what we will do on a 6-month basis, we will take 10% of his 6 months outgoing and just lock in 10% of his cost right here, right now. So we say, fine, it's going to cost me £1 to buy $1.20. Lock that in now. So it's a simple forward product. You lock today's rate for delivery in 6 months' time. So that 10% is known. 75% we strategically manage, and the rest is ad hoc. I think importantly, it depends for an importer. It depends on the proportion of your inputs that are bought in a different currency. if they're very significant, then it's dreadfully important to hedge this, which can be done. There's lots of different ways to skin the cat. Options are slightly more complex, and in my world, they're quite expensive to buy because they're not big enough to be cheap, basically. But having a forward-looking plan, which is either reactive as the rate moves over time, or having a forward-looking plan that involves pre-buying at a fixed rate now, is what we try and emphasize. And forwards, we call them it's an accountant's dream, right? So if I was to say to you, right, I'm a business owner, I spend 90% of my inputs come from the US, and you said to your accountant, right, every dollar I buy for the next year is going to cost me 90 pence. Every dollar I spend, your accountant is going to be over the moon, right? That's accountant's dream. Everything's locked in. This number of dollars costs this number of pounds. Thank you. So forwards are good like that. It's a known, but it doesn't allow you to participate in any of the upside. Yes, you're protected. Yes, everything's known, but there's no opportunity if the rate does move. Take an extreme event, 30% in your favor. You could have made, your inputs could have been 30% cheaper. It all depends on risk appetite, but the most important thing, to be honest with you, is choose to do nothing. If you do nothing and you become a victim of what is essentially a rate on a screen, very few people are going to have sympathy for you if you don't prepare.
All right. So we've been corporate focused until now. So I imagine I'm an individual at the moment.
Yep.
I earn money in one currency and I'm buying a house in a different country. So in this case, because I live in Lyon, I just say I'm a French person working in Switzerland. So I'm what we call here a transfrontalier, or a British person trying to buy a holiday home in Spain. How does this really affect me? Do I need to think about it, or is this just something that I see on the news and then put it aside?
Yeah, again, that's a good question, because I think it brings currency from a number on a screen to reality. So we don't, in my business, we don't want to scare people, and I think giving terrible scenarios is not that nobody wants to hear it, right? It's just as humans, it's not a nice way to introduce a concept. But the best example is, in fact, of buying a house, and I would, let's use the UK to Spain or UK to France purchase. But it's something that actually we've seen before. It does hurt people, but it can also just be a really sensible thing. So 1st of January, you're in the UK, you've got a budget of 800,000 quid, right? You found that's approximately your budget. You're looking around, you find a house in Spain, right? So the fixed cost is in Spain, isn't it? So that's going to cost you, let's call it €1 million. You don't have to say, well, you're going to buy a second house for €1 million. Can you adopt me? The important thing there is it's the 1st of January. You're going to buy something in, let's call it 3 months' time. And that something is going to cost you €1 million. So you can take the approach of do nothing. So you pay your 5%, 8% deposit, 10th of January, get to February, it's the end of March. Hi, I've got my 800,000 sterling, and I'm going to pay you €1 million. If the FX has moved, what if that 800,000 sterling no longer buys you €1 million? You've suddenly got to stump up, let's say, another 50,000 sterling in order to make your purchase, right? That's when it becomes very real, and it's because the fixed element is at the far end, and especially with, I think, large asset purchases. So we see a lot of people buying yachts, houses, large works of art, that sort of thing, things of significant value. They don't necessarily come with too much economic thinking. Anyone that's bought a house, I dare say you've always overpaid, right? Even if it's in your own currency. Okay, I've seen a house down the road. It's an emotional thing, it's an emotive thing. But a 3-month time lag between your decision and your payment, it's just full of risk. Yes, it might go in your favor, but it might not. There's oodles of risk there. So what you could easily do is, as with any business, so you could say, you could do the accountant's dream, you could make sure it's locked in, and you lock in your rate on the 10th of January. Again, whether you want to go for the full amount, it's a decision. You maybe at least lock in 50% of your outgoings in euros, so that you know exactly what 50% of the house price will cost you. But that's what we suggest as a safety valve. Some people go the whole hog and do like 90% we'll go to the market on the 10th of January, buy 900,000 euros at a fixed rate, and then at the end of March, when completions and everything's done and dusted, we will pay the million euros for the property. Other ways to do it again is to, throughout those 3 months, try and strategically buy those euros. So I don't know, maybe split it into chunks of 250,000, and if it goes in your favor, buy 250. If it keeps going in your favor, buy a little bit more, and then suddenly your million euros have only cost you £750,000. Great, you renovate the house, do what you want, go out and have a party. I don't know, but that's the good news. If the rate over that period starts going against you, that's all pretty painful. And this is probably where I think just having an open discussion about currency is the most useful thing. If you're willing to let it trickle away and lose money, then you're actively doing nothing. But we make people make rules. So yes, it's horrible to say you're going to have to buy it now because the rate has moved against you. This is on a daily basis becoming more and more expensive. When you're going to bite the bullet, we will pre-decide that with individuals, and basically it's our job to make people stick to their rules. So we do. It's best to go through the maths. If it moves 3%, what's that in sterling terms? What can you tolerate as an extra cost on your property? We are the bearers of bad news, but we make people make their own rules, and we make people stick to it. And I think it's the same as any other product, but these are significant purchases and worth just strategizing around.
Completely. Okay, thanks for that, Kevin. So we'll open it up to the Q&A now. So if anyone has any questions that they'd like to ask Kevin, please feel free to put them in the chat. Ian, I know you had a question that you wanted to ask.
Yeah,
do you want to start off?
I've got a question here about the sterling USD rate. So the press today is reporting that sterling could rise as much as up to 1.45 US dollars by the end of the year. The reasoning they give behind that is because of the trade deal having done with the EU. So there's a lot more positive story around that, and also the successful so far vaccine rollout in the UK, which people are seeing as a significant plus for the UK economy. So I wonder if you'd like to comment on that first of all. What do you think prospects are for GBP going forward?
Yep. I think sterling has every reason to be well supported for the reasons you just said. I think whatever the Brexit deal was, there's enormous emissions. So financial services are missing. You see the chaos at some of the ports, but they're sort of headline things. I think the fact that a deal was written down, now whether that's on the back of a fag packet, it doesn't really matter to the market. You've gone from June 2016 to the end of 2020 with the possibility of a no deal. That is true. It's certainly in my market, and I'm sure in the stock market as well. That was Brexit fatigue taking over. So the minute a deal was struck, now I don't care if it's written in pencil on the back of a stamp or back of a pag packet. I don't care if it was 35,000 pages long. The fact there was something at the end of the day, as prolonged and as tiresome as that was, is supportive for sterling. Had it been a no deal, that was all pretty dramatic and awful. So whatever the deal is, the fact that it exists is supportive of sterling. Of that, there is no doubt, simply because the other scenario is all pretty dark. So that's a positive move. I think that's put a floor on it. And from France's point of view, the vaccination rollout is enviable. I don't even have the words for it. I think France has vaccinated like 8 people, and there's gazillions. Both sets of my parents have been vaccinated. They've had both of them now. No idea what's going to happen here. So I think the vaccination rollout is an enormous plus side. Enormous. Yes, it's going to come with lots and lots of problems. This is unprecedented, but it's incredibly supportive for sterling. And for that reason, sterling has every reason to be on a high, because whatever, again, this is all relative, right? You're coming from very low positions, but globally, everyone's had a pretty shocking 2020. So any rebound is going to be a good rebound, and the chances of the UK rebounding quickly are now extraordinarily high. Okay, yes, it's been brutal, but it's been brutal everywhere. So any rebound from any position is great, and that's supportive of sterling. On the flip side, you've got the dollar, which I think any economic report at the moment suggests that will continue to weaken. Yes, it's had a good week. It's had a good couple of weeks. But if you look at euro dollar throughout last year, that's a massive move. It's a huge weakening of the dollar and looks set to continue for various different reasons. So I can see sterling being well supported. I can see the dollar consistently under pressure, which is the polar opposite of the UK's health situation at the moment. And I think moving on to, as you say, the services sector, I would say one downside there is certainly, so financial services appear to be missed out of any Brexit agreement, which is worrying. I saw the headline today that Holland is beginning to outpace London as in terms of financial recruitment, which is eye-opening. You wouldn't have thought that 10 years ago. But yeah, I think the service sector is a tricky one, to be honest with you, Ian. So France, bars, restaurants, cafes haven't been open since October. Am I going to be first to rush back? Am I going to be first to the restaurant? If I was used to going to a restaurant 2 or 3 times a week, am I going to keep going 2 or 3 times a week? I think that's a bit awkward for the UK. I think retail consumption, the services sector has supported it without doubt, but I question long-term viability of that. I think the footfall in shops will continue to decline. The online shopping frenzy will no doubt slow. And I think marginal consumption in restaurants or marginal consumption in services, full stop, I think will begin to slow. But that could be global. So
because the UK economy is so reliant on the service industry, then there's an immediate good news story, because if the rollout of the vaccine program continues to be successful, then people will be going back out and consuming, and therefore the bounce back, the comeback story for UK economy will be significant. But then going forward to medium term, your big question is whether that will be sustainable. Yeah,
exactly that. I could. If I put it that way, I'd be very happy with the way I put it. That's exactly it. Concise, succinct. I think that's a medium-term risk. I don't think that the initial burst of consumption will continue. But again, currencies work on a relative basis, right? So if that happens in the US as well, so you're going to get sterling rising quicker, the US will probably catch up, and then you have them both decline. So it's an equilibrium.
So we've got a sort of an annex to that question that's just come in. So I'll sort of ask it, and then I'll invite anybody else who's got any questions to send them in for George and for Alex to ask. But the kind of annex to that question is, what happens to GBP euro? Presumably, there's an argument that GBP will strengthen against the euro, at least in the short term, if our rollout of vaccination continues to be successful. So UK rollout continues to be successful, and because of the fact that the UK economy is so service reliant, that there'll be kind of a quicker bounce back. So presumably that supports sterling against euro in the short term. But what happens longer term with the euro continuing to have this huge, the Eurozone continuing to have this huge sort of trade surplus with the rest of the world? Presumably sterling goes up against the euro and then progressively would start to fall once the Eurozone economy starts coming back. Would that be right?
That would be my sentiment, and I'll be quite honest with you. three biggest currencies, or traded currency on earth: sterling, euros, and dollars. I think the dollar's fallen out of favor. Certainly last year, that's what you see. So, and throughout last year, you've got nobody wanted to buy sterling, nobody wanted to buy dollars. So you continually see, and again, George, it comes back to your question earlier, the sentiment. So one of those three currencies. So as I said earlier, the dollar is 88%, is one side of 88% of all trades. Now, if you want to sell something, that generally means, for safety's sake, you're going to buy the dollar against it. If you don't want to buy the dollar, you're going to go for something else, maybe go for Swiss or something like that, nice and safe. Euro is in contention, and so is sterling every time. So if you're not going to buy dollars, you've taken a relatively large player out of the game. Last year, if you don't want to buy sterling, there's another large player out of the game. So it's sort of only left euros as an enormous, highly liquid currency out there that's left to purchase. And the euro is, again, puzzling for me. If I knew, if only I knew. But it's been so well supported. You look at all of the crisis, all of the mess that we've seen in the last 5 years. You have hugely disparate economies there, and yet it's continually well supported. So, in answer to the question, sterling euro, it has every reason to go up, because sterling has every reason to go up. But the euro, it's difficult not to bet against, but it's just continually supported in a very, very real way in the market. And George, it boils down to sentiment. It's difficult to harness. Where you can have some absolutely diabolical data out of Germany, awful data out of France, awful data out of Spain, awful data out of Portugal, and yet you very rarely see a knee-jerk, enormous sell-off in euros. It's very, very rare. An across-the-board sell-off, not specific currency to currency. So I find it very difficult to put a weakening euro against any other currency. I really do. So yes, I can see sterling euro being well supported. I can't see it rocketing up anywhere near 120. We're at 113-ish today, 114-ish. If we go to 116.50, that's going to be difficult to break. But you need a weaker euro to do that, and it just doesn't seem to happen. And that is a market force that anybody on this call, or anybody globally, if they can explain it to me, I'd love to hear it. I really would.
Do you think sterling could go further the other way?
It's throughout last year, the answer I would have said without doubt, asymmetric.
I think it could have crossed over to the point where you were getting less than €1 for £1.
I think that's a bit dramatic, but again, it's brilliant, because the fact that it's was even discussed last year and discussed in 2018 is great. FX loves that. The minute you mention a number, somebody somewhere, and the market forces and sentiment will try and push it, and really, really push. I think it can, since Brexit, you see an asymmetric reaction in any data. Whenever any data release, we consistently saw asymmetric reactions. So good news, you'd have a little bit of a rally. Bad news, you'd have 2, 3, 4 times the magnitude of the move. Because that has happened, I think it can be quite vulnerable. But that level of the magnitude of asymmetry, I think, has disappeared without doubt. But yeah, I'd never say never. There's a big difference between the way a stock's valued and the way a currency is valued. A stock, if it trades at 80, can only go to 0, right? Currencies can go much, much further than that. So if you short a stock, your maximum loss is the value of that stock, right? You short a currency, you've got an awful long way to go.
All right. So far we've been talking about the traditional currencies, let's just say that. But what about the digital currencies? Actually, we've done an episode with Santiago on the blockchain. What do you see that in relation, like the future of the foreign exchange in relation to the blockchain?
So very good question. Again, it's I only deal in regulated products, so not my thing. I obviously need to keep abreast of it, but massively not my thing. And Warren Buffett called it. Was it Warren Buffett? So he called it rat poison squared, which is quite a dramatic description for something that is all over the headlines. And my mum mentioned to me the other day. I'm not sure, to be honest with you, I think the technology behind it is phenomenal. I think blockchain and everything there has an awful lot going for it. That could revolutionize all sorts of traceability of of any supply chain. That's interesting. So put it the other way, right? So if Elon Musk had mentioned another particular stock, would he have been called in by the SEC regulator for market manipulation? I would imagine they would have a pretty big, long conversation about it, right? The fact that my mum thinks it's brilliant and everyone's cheering that it's gone up, it just doesn't seem to click with me for various reasons. But yeah, I think the technology behind it's brilliant. The world's crying out for change. I happened to speak to a lawyer today in London who had a great year last year because he's got loads of clients searching for their money, searching for their crypto. The fact that, so my biggest fear until PayPal came into the game of purchasing, again, not as an investment, it's betting, it's gambling. There's a big difference between trading and investing. My biggest concern for buying any crypto would always be, where's it stored? Where is it really stored? Who's looking after it? What's the clearing house that it's come through to get into my digital wallet? Until PayPal came into play, which is obviously another part of this enormous rally we've seen this last year, the fact that I'm concerned about purchasing and securely holding what is being called an alternative currency, again, that doesn't ring true. So I'm concerned about so put it in fiat terms, I'm worried about the protection that my wallet gives my money before I even spend it. Those concerns are very real. So until all of that is overcome,
it's not a particularly liquid market, is it? If we're talking specifically about Bitcoin, that there are, I think, something like 40% of the market is owned by a small handful of owners.
Yeah, exactly. I think all of these factors play into something that it's very real. It's obviously it's in the headlines. I think that, again, the technology seems really sound. Whatever technology has brought us, this is phenomenal. But until the entire world wants to start accepting it as some sort of hold of an asset that is a hold of value, a store of value, and a medium of exchange, it's just another puntable commodity to me. I think for me personally, it's got to go a long way before I'm going to go out and buy anything with it, and certainly a long way before I feel secure in actually properly holding it in some form of wallet. I think the fact that PayPal's got involved is great.
It's quite amusing that the Chinese regulator calls it a gambling asset.
Yes, there you go.
Which is quite a definition.
Yeah.
Okay. Right. Does anybody else have any other questions that they want to send in to us?
For Chinese to be a gambling asset.
Sorry?
I'm saying it's a compliment for the Chinese to call it a gambling asset.
Has anybody else got any questions before we wrap up? Anybody like to send a question in to us?
Just coming to that, the last message there, I couldn't agree more. I think in terms of cryptos, I think Apple are way ahead of us, way ahead of the rest of the world. Yeah, I've seen as well the Bank of New York looking at digital wallets. The fact that central banks are talking about this and regulators are not pouncing on it, but have an opinion on it, it's great. I think you're right. Apple, Amazon, the big tech companies are way beyond central banks in terms of getting crypto to become a proper exchangeable or something, a medium of exchange. I completely agree. And it's a fault within the central bank system, I think, that they're not anywhere near the tech companies. It's a little bit disappointing, but look, 20 years time, I could be proved wrong, but until there's more security and regulation around it, it's not something for me personally.
Okay, fantastic. Anyone else have any final questions? No? Brilliant. Okay, well, that's great. I guess that brings to an end our questions for today. Thank you, Kevin, for taking the time to speak to us. We really do appreciate it. I think everyone will have learned a lot as well. Thank you, Alex, for co-hosting, and thanks to the whole of the Future Money team. So Ian, Adam, and Mai Wen, who do so much behind the scenes as well. Thank you to our sponsors, Sancheng Digital and the Toulouse Business Exchange.
Yep.
I hope you've all enjoyed it. And if you're watching on YouTube, please give us a like, leave a comment, and subscribe to our channel. Please follow us on social media, Instagram, Facebook, Twitter, and LinkedIn. All the links will be available on all of our platforms and YouTube channel, so you should be able to find us pretty easily. Please share our future events with friends and family and colleagues and anyone. And we look forward to welcoming you to our next event, which will be on why the markets don't actually reflect the real economy. So thank you all, and wherever you are, have a great day.
Have a great evening.
Thank you all very much indeed.
Thank you.
Thank you.
All the best, everyone. Cheers. Bye-bye.